Welcome to Grade 11 Accounting. Grade 11 Accounting is a very good course for a lot of people to take, especially for those who are interested in business, but also for those who may not pursue business as a career, because accounting relates a lot to do with numbers and financial information of a business. So we're going to start our accounting course. The agenda for today is as follows. As you can see from the slide, we're going to look at accounting as a language of business. We're going to look at the mode of communication for accounting info. We're going to discuss some of the users of accounting info, and I'm going to briefly introduce you to accounting ethics. Ethics are extremely critical component of accounting. All accountants are expected to be extremely ethical in their behavior. We'll look at some of the disciplines within accounting and the global designations that a professional accountant can achieve or strive for. So, I forget who it was, said something like this. They said the language of business is accounting, and if you don't understand the language, your chances of success are reduced. It's probably quite famous among all executives, because what happens is accounting is how you communicate your information to your employees, to your to other users of the accounting information, and of course, knowledge of accounting and finance will help you not just in your careers, but also if you ever plan to start your own business, it will also help you there. Accounting must be communicated through what we call an annual report. So an annual report is a document, is a published document that each company publishes at the end of their annual year. So in this document, there's a lot of information about the company, and some of that has to do with accounting. Most of that has to do with accounting, but some of it is clearly financial statements. There are 4 financial statements that are in this annual report, and these happen to be as listed. Number 1, the most important one, balance sheet. Number 2, income statement. Then the third one comes owner's equity or a retained earnings statement, and a cash flow statement. So a balance sheet, contrary to popular belief, has nothing to do with balancing things. It's all about the ending balances of the accounts that are there. So think of a balance sheet as a picture, as a still picture. That is, a still picture takes your picture at that second, at that moment. And a balance sheet is the company's accounting information, ending balances for that day. So a balance sheet is usually, let's say, it is usually at the end of the year. So let's say if it's the year end for the company is December 31, so December 31 would have a balance sheet for that year. Income statement is unlike a balance sheet. Income statement gives you info for the entire year. So how the numbers were in the year. So what happens is income statement is like a video. So starting from Jan 1 to December 31, for instance. So it's like as I said, it's like a video. So those are the 2 more important financial statements, which we will introduce you to, which we will work on to begin with. And as you grow your accounting knowledge, you will then get into the retained earnings statement and cash flow statement. One thing to note here is, as per GAAP is generally accepted accounting principles. As per GAAP, financial statements measure economic phenomena of the business. Now, what is this phenomena? So phenomena, it basically means economic, financial numbers of a business. So there are certain things that don't have an economic phenomena. For example, the president of a company came to the office at 7:30 in the morning. That has no financial information. That is not an economic phenomena. But economic phenomena may be that the assistant paid rent for the month, equaling $1,000. That is economic phenomena. So that is something that must be included in the financial statements. So that's how you differentiate. It's very critical to understand that only economic information, financial information, is a component of financial statements. So we often wonder who uses financial statements. Who are these users? Financial statements, accounting is done for a purpose. It can be done for many different purposes. Oftentimes, it is done to be used by investors or potential investors. So investors or potential investors are those that would like to or have already invested in a company. They want to see the financial statements on a regular basis. Creditors, meaning companies that have lent money, like the banks, they also would like to see financial statements at the end of a year. The government, of course, for tax purposes, because based on your income, on a company's income, the government charges tax. Employees and management would also like to see financial statements because apparently they want to know how well the company is doing. Should they ask for a raise? Should they get a bonus? Things of that nature. Accounting ethics is extremely important as well. Accounting ethics relates with a few things, 4 components that we will discuss here and throughout the course. So all your major assessments will have ethics built into them. So you should be aware of these 4 things. All accountants should be competent. Now what does that mean? That of course means that they have a rigorous plan that they have to go through. They of course need, as you may know, that they need a university degree plus a few years of further education and examinations and so on. But at the same time, once they are professional accountants, they need to maintain their competence. How do they maintain their competence? They must do 40 hours of professional development every year, and they must sign off on this. There are certain assessments based on this. So this means that they are always competent with changes, with any accounting, tax related kind of work that's happening in the world, and they are updated. Confidentiality is paramount. So confidentiality is extremely critical to a lot of clients. Well, I would assume all clients for accounting offices. So confidentiality must be respected. You must have certain policies as an accountant or as an accounting firm that you should deal with, you should elaborate on, and you should practice. The third thing that accountants must look at is the integrity principle. So all accountants are expected to do the right thing. If given a choice where one thing is blatantly wrong, you should be looking at the other option, which is absolutely correct. Oftentimes we are given choices where both of them may contain some wrongdoing or some things that may not be perfect, but you have to then take into account reality and do the best you can based on the information you have. What it's trying to really say is that you should be honest to yourself and to your profession. You should not get under any kind of duress or pressure from your boss or client to do things which are not right. So integrity is very, very important. And of course, objectivity. So objectivity implies that you should be free from bias. So an example here would be that if you are doing financial statements or accounting work for your own business, you should clearly state that somewhere. Or if you're doing accounting or financial statements for your parents' business or for your siblings' business or for your spouse's business, you should clearly state that in the notice that this is a business that belongs to my family, and hence this may not be completely free from bias. The banks, the investors, the government should be aware of this. They should, the users should be able to ask a third accountant to verify your work. So you have to realize the importance of these things. Now, very briefly, we'll get into a few disciplines within accounting. We have a lot of variety of accounting work and accounting professionals. You can see from here that there's financial accounting, which is regular accounting, which is what we're going to learn, not just in grade 11 and 12, but also beyond for the first few years. Then there's management accounting, a focused area of accounting where you help the management of the company. The user is only the management for that kind of accounting. Then you have auditing and assurance services. This is a third party verifying your data. And then you've got tax services. Tax is a highly specialized area in the world. Each country has their own tax policies, and so you've got to be aware of those things if you are practicing tax. and there's the accounting theory concepts. These are, of course, academic people or people who sit on different boards and who would like to do a lot of other kind of work with regards to theoretical concepts. Moving on to global accounting designations. Globally, accounting is a very, very famous and lucrative business, a lucrative designation to go for. In the world, there are several types of designations that exist. You can see a few of them listed here. A lot of countries have developed their own, but the two predominant ones in the world are CPA and CA. CPA stands for either a certified public accountant or a chartered professional accountant, and CA stands for a chartered accountant. So in Canada, we used to have three, CA, CG, and CMA. We no longer have those three. We now have CPA, which is Chartered Professional Accountant. So they have all merged and united under one to lessen the confusion for all the rest of the people who are not accountants. In the US, you have CPA as the predominant accounting body. In some parts of the world, like the UK or Africa or Australia, you have CA, Chartered Accountant, as a predominant body. To become an accountant, you almost always need a university degree. Once you have a university degree, then you need a 2 or 3 year program further, part-time education while you are working, and you need to pass certain exams. Those exams can be lengthy, can be quite intimidating, but recently people have started to study further rather than just take those 2-3 years of courses. With CPA Ontario, for example, they also study on their own with different companies or different businesses or just among themselves, and they are increasing their chances of success. It is a very lucrative profession to get into. However, you need to be very well versed in accounting, you need to be very well versed in ethics and in business. Your business acumen has to be at a very high level. So we will stop it here. I appreciate you listening, and we'll continue next time. Remember, ARTW, accounting rules the world.